Hi everybody, this is an introduction to how to select the very best linked service accounts from our Link-2-Success service. Now this is really just a training video for those who already are involved in the Link-2-Success service or those that want to participate and need to know a little bit more. Selecting an account to link to, or maybe a whole lot of accounts, is quite a tricky process if you're not used to making financial decisions and analyzing results to come to a conclusion. Some decisions are tricky. Which house shall I buy? Shall I rent or shall I buy it? Which horse shall I back in a race if you've never been to races before? Which car shall I buy? There's so many options. There's maintenance plans and all those kind of things to sift through to buy a car. Which shares should I invest in? And again, there's a whole lot of information that you need to go through to analyze that decision. Sometimes people just say, oh, my brother bought it and he says it's good. Others say, no, I want to see all the details, who's involved in the management of the company, and so on. And there are other decisions such as, what shall I invest my time in? So let's have a look at how you can select the best linking accounts from our Link-2-Success service. So in this video and the videos that follow, I'm going to try and cover all the factors that you need to take into account. There are quantitative factors which involve numbers, and there are non-quantifiable factors which involve things like strategies. So I'm going to try and keep it as simple as possible, and if you do need to re-look certain aspects, please do that by watching the video a few times. But the videos that follow will cover a lot of the aspects that I deal with in this video in a lot more detail. This one is to give you a broad overview. So on your screen, the overall approach is one of creating short lists and eliminating accounts until you get to the accounts that you like best. So it's an elimination process. It's not an instant thing. It's not an easy process like, should I have sugar in my coffee or not? That's only two factors to consider. In this one, there are just so many factors to consider. So as you can see, that funnel, we're going to start with over 120 accounts, and we're going to end up with maybe 3 or 5 accounts as examples of applying what I'm going to be showing you in this video. Now, the key starting point of selecting the best account is the actual list of accounts, and on your screen you can see a typical list of accounts that gets published every week, and I'm going to go through the key elements of that list and discuss them in a little bit more detail for you to get a better appreciation of them and also to relate them to this decision-making process that you have to make. So let's have a look. Firstly, the list is the big one. It consists of 123 accounts. So there's a lot of sorting to do, but don't worry, there's some very quick ways of eliminating the majority of the accounts. Then you need to look at the quality of the list, and you can see this list, in spite of consisting of 123 accounts, has a gain per account of 95%. So on average, these accounts are doubling themselves quite often. Then the average monthly gain on these accounts is 14%. Now that's quite a big number. It's well above the industry average. For funds like this, a gain of 30% would be fantastic. We're almost achieving that in 2 months. So fantastic gains, and that is an average. An average is the average of 123 accounts. So there are accounts that are doing way better, and there are accounts that are doing less than average. Okay, we're on to number 4, and number 4 is the list of links, and here they are. You can see, and they go down. 123 links are listed. They all have an FX blue link, so that's why they're blue. So when you go to this list, you can click on that link and it will take you to an FX blue analysis. So that's the name of the various links. Then we have the investors link to those links. Now that's one of the criteria that you might use. You might say, I want to invest with a link that is very popular with investors. So there you can see that particular link at 82 investors. This one's got 53, 54, and so on. So you might not link with ones that have only got 2 or 1, and you will link with the others. So that's another criteria that you can use for selecting your account, one of the many. Then we look down this column and we see the age of the account. Now that again is a selection criteria. A lot of traders want to see a long track record so that it is proven over a long period of time. They have more confidence in a long track record. So that is a selection criteria. Shorter time frames have more risk. Longer time frames have less risk because they have traded through all the worst market conditions you can imagine. So age of account is one of the factors that we're going to be looking at. Then the account gains since it started trading, and here you can see some phenomenal amounts here, 230%. There's a 608% gain on that particular account, and so on. So you could go down there, and this could also be a criteria. You want to seek accounts that have doubled themselves, or accounts that are doing well. You can then use that to create the shortlist. Remember, we're working towards a shortlist, and the criteria that we're talking about now will help you create a shortlist. Then the next bit of information is the account size traded. Not all that serious, because many times it's the same account. Because you can see here, 6R has been traded as a $1,000 account and as a $10,000 account. So sometimes they're the same. So that's most probably not a major selection criteria. Then the robot that was used, and one of the things that you need to do when you are serious about selecting the best accounts is to have a little bit of knowledge about how these robots work. How many open deals do they create? How long do they take when they're in a drawdown, and those kind of factors. So the robots differ in that particular way. For instance, the hedged EA doesn't have a drawdown period because it's trading both ways at the same time. So the account is growing all the time, and therefore it doesn't have a plateau. But that doesn't mean it's the best robot. You need to analyze the overall results. Then leverage is important, because you cannot link to an account that has leverage that is higher than you are experiencing. Otherwise, you are exposing yourself to a margin call. So leverage is important information. Take note of that. In this case, 100 to 1 is the recommended leverage to follow that particular account. Then we go to the next column, which is the monthly gain on that particular account. And again, because this is a dual account, this account trades $10,000, and it has a gain of almost $5,000. So it's almost making a $5,000 gain in a month, which is absolutely phenomenal. And as a percentage, that is 48%. So those are the two factors, and in fact that's where I like starting. I like starting at accounts that are producing the highest monthly gain. That is my first short list, and I then delve into those accounts in more detail once I've got that list. So what you can see here is you can actually sort any of these columns from high to low, or from low to high, or any way you want. And I have in fact sorted this particular column, the monthly gain one, as my first shortlist, and that brings me to accounts that I would like to analyze further. So already I might have eliminated most probably 60 or 70% of the accounts by just looking at the top monthly gains, the 30% monthly gains. But you can choose whatever criteria you like to use. And something that I haven't marked is the success rate. You can see the success rate is so constant that I haven't really marked that as a factor. All the accounts are producing success rates that are in the 60s. Okay, so that's our first document that we're going to be looking at, and that is the bit of information that you've been exposed to. You can then sort it and then start looking at the various accounts. Now how you do that is you click on the link And in my case, I'll click on the link, the first link, because that's the first account that I want to analyze, and that will take you to FX Blue. So let's go and have a look at FX Blue. Now here's the page that you most probably will see after clicking that particular link, and it has some graphs showing, in this case I've selected equity. There is a drop down here, you can select whatever graph you want. Balance, this in fact is the balance and equity graph, and I'll talk about this particular one. Here are the currencies traded, number of currencies traded. There we are. These are the statistics about the trading, and there are the actual results of the trading. So I'm going to go through these points one by one. They're very important in terms of you appreciating the overall picture of this particular account, and then you do the same thing for the next account and the same thing for the next account. So when looking at the chart, the first chart, I always set it to equity, because equity is the balance less the loss that is being encountered at the time. So you can see when those lines are far apart, it means there's a big loss, and when they are very close together, they are a small loss. So that's the number one thing I look at, is how big are these dips that have been in. Because what happens that when the account has a drawdown, which means it's got a loss for a very long time, then the account might stagnate. In this particular case, because I think there are 3 currencies traded at the same time, this account did not stagnate during its drawdown period. But there's one where it was fairly flat for a long period. Then the account stagnates until the profit recovery process happens. So what happened with this? Let's analyze this chart. Firstly, you can see that the growth was very strong in the beginning and then flattened out towards the end. Now that's not necessarily a bad thing. The reason is that the trader starts out, finds out how the settings that the trader is using are performing, and then he can see, and then the trader sees that, there's drawdowns happening, I'm going to change some of the settings. So the trader refines the settings and it works quite well, and then suddenly there's a bit of a drawdown and he looks again which settings may have caused those drawdowns, and the trader refines them, and as you can see now the drawdowns are almost under control. So that's a big factor. If drawdowns are under control, that means that's a healthy account. But you must appreciate that the account has gone through refinement in the process. So what you're getting here is most probably lower income but more secure income. Element of drawdowns has been reduced. So the graph is very important. You need to see, most of them will have a strong growth and then a plateauing off, a lot of drawdown in the growth period, but then slowly getting under control. So that's the kind of thing you want to look for. This is actually means that this account has got under control quite nicely. So that's number one. Let's go and have a look. What's number two? Okay, so the total return is 229%. So this account has been doubled twice. It's taken 10,000 to 20,000 to 30,000. As you can see, the equity at the moment is over 30,000. So the performance of this account is really good. Then we look at the age. The age of the account is 157 days. That's approximately just over 5 months, which is good. This account has traded well through most market conditions in that particular period. So it has a nice long history behind it, and it has refined itself over that historical period. So again, the age of the account, quite important. If it's too young, just be careful, study the graph very carefully. Maybe the trader hasn't had enough time to refine the settings. Okay, so let's move on. And we've seen the trade win percentages roughly in the 60s for all of the accounts. So this one confirms that. That's number 4. Number 5 shows the number of currencies traded. Now here's a huge number, and I don't want to count them, but it looks like about 12 or 13 currencies that have been trading. That is important because the more currencies that are trading, the higher the risk, but sometimes it also helps in drawdown periods like over there, that some of the currencies are making profits while others are in a drawdown, so you have a compensating effect, and the underperformers are subsidized by the good performers, and that's in fact what happened here. Look how the graph went up. There are all the underperformers, and eventually they met up again, and they do meet up again eventually. Okay, so that's number 5. So number of currencies, the more they are, maybe it does increase the risk in this investment, but this one seems to be nicely fine-tuned with very small drawdowns. Then, very important, when you're investing for the first time, you don't want to invest in an account that has a big drawdown. The reason being is if you invest in this account and let's say there's the drawdown, it might take a long time for the account to recover. So what's going to happen, you're effectively not going to have any trades, and it could be for weeks while the account is recovering. So the ideal thing is not to invest in accounts that currently have a large drawdown. Now, what is a large drawdown? I would say nothing above $300 should be invested in. So this one is fine to start investing, but be aware that there is a drawdown at the moment. It looks like the drawdowns are under control, so that's not too serious. But don't go and invest in an account that now has a $2,000 drawdown. You're going to be waiting and waiting for a long time to get the deals that come through that kind of account. That's a common mistake that I see traders do. They look at the profits being made and they say, oh, this account is making a lot of profits, but they don't look at the current situation. What is the drawdown status of this account? All right, and then here we have some more statistics, and this is the monthly return statistic. Now, this is not the monthly return over the life of the account. This is the monthly return over the last month. So you can see the lifelong one on the previous slide was 48%, and that's because it had the advantage of this rapid growing start, and now it's going more sideways. The sideways move is generating 26%. So that's your latest monthly return. The average is 48, but this is, so you need to be aware of what the statistics are telling you. And then here's one that says the peak drawdown, and it's shown as 0. Now I must warn you that FX Blue is not 100% accurate with its statistics, and this is one where they are very poor on, and I'm going to show you one that's better. It's not 100% correct, but it is a way better than that 0 drawdown that you're seeing there. So as you can see, we use the information that's supplied in the list of linkable accounts, and we also look at the FX Blue analysis in a lot more detail. And a lot of these items I'm going to discuss in future videos because we're going to turn them into ratios. You want to see the ratio of gains to drawdowns, and there's all kinds of ratios that are quite important for you to refine your decision making, and that's why we've got that funnel. We're still at the top of the funnel. We're getting an idea of what the good ones look like, and we are slowly moving down the funnel. And we'll cover the rest of the funnel in future videos. So let's go and have a look at this peak drawdown number that's stated here as 0. On the page that these statistics are, you will see a menu item called Stats, and that's where you go. Okay, so here we're on that menu item I've just mentioned. So the first thing is you click on Stats. Then you come over here and there's a whole lot of tabs here. You click on the Charts tab, and then then from a drop-down menu, this is a drop-down menu, you select Floating Profit and Loss Cash Hourly. So in other words, the system will go in and look at what the worst drawdown was in any hours since the account has started. So it is not 100% accurate, but it's a lot more accurate than what we saw earlier as 0. So here you can see the drawdowns that we saw on the other charts. Here you can see those early ones were really rough. The trader refined the settings a little bit, but it incurred another one. So the trader refined the settings, and now this account seems to be quite under control in terms of settings. But here is the maximum drawdown that has occurred, and it's huge on this particular account. It's almost 10,000 down here. It's about 9,200, and over here it's 7,000. So it has had a rough life to start with, and you must be aware of it, because that 7,000 can reoccur for some or other reason in the future. So that is something that you've got to bear in mind. Also, all of these accounts are traded on a $10,000 account, and they trade it continuously as if they are 10,000 accounts. So if you look at the balance now, it's 38,000 or 39,000. That's not how the account is being traded. It's still being traded as a $10,000 account. And the reason for that is that anybody can join that account at any time with $10,000, and therefore you can't start trading it as a $38,000 account. So this 7,000 here is something that you've got to bear in mind, that if you invest in this particular account, there is a possibility that it can incur a $7,000 drawdown. Now, again, and then sometimes it's just the luck of the draw. Sometimes if you can see it's going sideways, and then you say, oh, I'm going to invest in it. And as you invest, the drawdown happens. It's just the luck of the draw in terms of timing on investments. Sometimes you can invest there and nothing's happened, and you can make your 28% return in a month. Sometimes you invest there and boom, boom, that happens. So timing is just one of those things in trading, and that is in fact one of the strategies I'm going to be talking about, is what timing do you use to invest in these accounts. Now in future videos we're going to go through some checklists. This is the quantifiable checklist. There's also going to be a non-quantifiable checklist that we'll go to. As I say, this is an introduction. I see it's been a very lengthy introduction. It's well over 20 minutes, and I apologize for this, but it is training, and it is most probably the most important aspect of the Link service, is to select the accounts that have the lowest risk and the highest return. So please watch out for the next video, where I will go into some of these factors in a lot more detail. But I think I've given you quite a lot already for you to start noticing important aspects of what you should be looking at. You should be looking at that maximum drawdown number. That's a scary number. You should be not investing in accounts that have a big drawdown at the moment, and so on. So I've already given you a lot of clues. You can re-watch this video and just go through all the factors that I've already spoken about. And as I say, we'll go into them in a lot more depth in terms of ratios and that kind of thing in the next video. So from me, Alex Aploy, cheerio.